This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com. Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
Joining forces, drug maker Actavis is buying Forest Laboratories for $25 billion. Is this just the beginning of a wave of healthcare mergers as the industry undergoes historic change?
Losing its fizz, shares of Coca-Cola have their worst day in more than 2 years. Profits are down, so is demand for sugary beverages. What the company must do now to juice sales and the stock.
Home sweet home? Not this month. Home builder sentiment plunges just as the unofficial start to the spring selling season gets underway. Is it a bad sign for the housing market? We have all that and more tonight on Nightly Business Report for Tuesday, February 18th.
Good evening, everyone, and welcome. Two big stories leading our broadcast tonight. One, disappointing earnings from Coca-Cola after sales in North America lost some of their fizz last quarter. That sent the stock sharply lower. More on the troubles at Coke in just a moment. But the other big story tonight, a mega merger in pharmaceuticals. Ireland-based generic drug maker Actavis agreed to buy U.S. drug maker Forest Labs for $25 billion in cash and stock, combining two of the world's fastest-growing specialty drug makers and a possible harbinger of more mergers in the healthcare industry. Actavis CEO Paul Bizzarro spoke today about the changing environment in the industry and the need to control costs.
As our environment changes, the pharmaceutical space changes, one of the things we know we have to do is provide a broad range of product offerings to our customers, including branded products and high-quality generic products. That's going to be key. Cost containment is key. Hospitals are looking for cost containment. Physicians are looking for cost containment. And the government is looking for cost containment. And I think we're well positioned now to be the leader in that space.
Shares of Forest Labs, best known for its anti-anxiety pill Lexapro and the Alzheimer's medication Namenda, shot up nearly 28%, while Actavis shares, which trade on the New York Stock Exchange, rose 5%.
Our guest tonight says today's big pharma deal could be a sign of what's to come in the healthcare sector. He's Rich Peterson, director with S&P Capital IQ. Rich, nice to see you. You heard our coverage of the Actavis deal, and with the CEO, they're saying that pharma space is changing. They have to be cost conscious when it comes to hospitals and insurers and all of that. As you look at this whole healthcare space, who are going to be the buyers and who are going to be the sellers?
Well, first, Susie, you look at the landscape for healthcare M&A. In 2013, there was less than $100 billion in announced transactions in the United States. That was the lowest number since 2004, according to our numbers from S&P Capital IQ. I think one part of the downturn of activity last year was concerned about what the impact was from the Affordable Care Act. Now we're seeing basically a pent-up of activity from deals that were deferred from last year. Obviously, the transaction today being the largest healthcare deal this year and the largest since Express Scripts acquired Medco for over $30 billion in July 2011, augurs well for the sector. I think the sector is seeing steady revenue growth. In the fourth quarter, their expectations are for double the S&P 500 norm for revenue growth, and earnings have been steadily rising. Plus, you have a lot of cash on the balance sheet. In terms of companies that are expected to make deals, Merck and Pfizer have talked about shedding off some units that they feel are not growing as fast as they like. But in terms of companies, you have companies like Med Assets or Alliance Express areas that can provide investor opportunities. But I think as a sector, as I said, we had slow growth in 2013 in terms of deal activity, and that should rise going in 2014.
Rich, Forest recently bought a company. I guess it's not just the drug makers, specialty, generic, whatever, that are going to be the buyers and sellers in this healthcare area. It's going to be the device makers, the healthcare management companies. It's broader than just drug companies, right?
Correct. I mean, not even talking about corporate sponsors. We also forget about private equity. In fact, earlier this year, the Carlyle Group purchased a unit from Johnson & Johnson for over $4 billion. And given the fact that The private equity firms have over $700 billion of dry powder that is unused capital. The healthcare sector could be one that they'll be increasingly looking as targets.
Mm-hmm. And are these going to be big deals? Oh, today's was a big deal. $25 billion is a lot of money, but are we going to see more smaller strategic deals, or are they going for big deals where, in this new landscape, bigger is better? Is that the case?
Well, I think, if you look over the numbers of transactions that occurred over the past 6 months, the average deal size is about $2.9 billion. So we're talking about the middle market of deal size, and instead of $25 billion is the biggest in over 2.5 years. So today's deal is really the exception rather than the rule. In some cases, companies look to acquire assets, divisions, units that are underperforming, or just trying to grow their footprint by buying companies that are privately held and not in the public marketplace.
30 seconds, Rich. In the drug space, is it being driven by pipeline concerns on these companies' parts?
Oh, and very much so. The fact is, you have concerns that you have expirations of patents, and the fact that there's pressure to grow opportunities. They have to look for new ventures. And the fact is, I said, with the new regulatory environment where companies and consumers are forced to look for cost savings, these companies are going to try to provide that.
All right, Rich, thanks so much. Rich Peterson with S&P Capital IQ.
Well, the activist acquisition of Forest Labs giving a boost to some other drug manufacturers today. Teva Pharmaceuticals, Mylan, Allergan, all seeing gains today.
Well, as Tyler mentioned just a moment ago, it was a different story for Coca-Cola stock today. Coke was the biggest loser in the Dow. Shares fell nearly 4% and are down almost 10% so far this year. Investors were disappointed with Coke's quarterly results out this morning. Earnings were in line with estimates, and global sales rose last quarter, but soda sales in North America tumbled. The news reinforced a nasty truth for Coke. Fewer Americans are drinking sugary sodas, opting instead for healthier drinks. Now, yes, Coke does make some of those too. Dasani purified water, vitamin water, Powerade drinks, Minute Maid and Odwalla juices, and Honest teas. But the sweet, bubbly stuff is still the company's bread and butter, and that's a big problem for Coke, and the company knows it.
Well, joining us now to talk more about Coca-Cola, a key Dow component, is Dan Veru. He's Chief Investment Officer at Palisade Capital Management. Dan, welcome. Good to have you in the studio with us this evening. Would you be a buyer of Coca-Cola at this price? If not, why not?
Not yet, because I think the challenges are not going to go away. If you look at the way the company is set up for 2014, it looks like it's going to be much more of a back-end loaded year for them, financially speaking. So I really think there's no hurry, and they're doing everything that they can do in the context of macro forces that are just too big for any company to outweigh, even a brand icon like Coca-Cola.
Well, the Coca-Cola CEO, Muhtar Kent, said today, he was quoted as saying it was macroeconomic global challenges. But, how much is it really, these cyclical economic issues? And is it more that people are drinking healthier drinks and yes, Coke has a structural problem to deal with?
The way I see it, they didn't, in the U.S., Diet Coke was actually problematic for them because people are, as you say, are opting for more healthier choices, even though, there's no calories in Diet Coke. They don't perhaps like the contents of Diet Coke. So they're looking for more organic alternatives on the low-calorie side, perhaps some reformulation or some enhancement to formulation for Diet Coke as well to spur growth within the U.S.
The trend for healthier beverages is most notable in North America and the United States and the developed world. But a lot of Coke's growth has come, hasn't it, and won't it, from the developing world?
There's no doubt about it, and it wasn't enough to counteract the forces in the developed market this year. Plus, currency is playing some havoc with the results as well. And those
stronger dollar hurts them.
And those emerging market currencies are difficult to hedge against because those markets are not liquid enough. You could certainly hedge against euro exposure given the size of the euro, but you can't in some of these emerging markets.
So let me go back to what I asked you.
Yeah.
The first part is that, does Coke really have to change its business model? You look at a company, its competitor, Pepsi, besides the sugary drinks, it also has food and snacks and all of that.
Yep.
I don't know if that's the solution for Coke, but do they have to change their business model?
Well, I don't know if they have to change their business model, but they definitely have to think out of the box. box or out of the can, if you will. Their partnership with Green Mountain looks quite interesting. I don't know how that's going to evolve, but that's yet another non-soda pop product in the arsenal of their product line. So we could perhaps see them get more active in coffee or other products like that, away from the traditional.
Would that be enough of a change?
It seems to me like, given the size of Coke, they'd have to do a series of acquisitions. Certainly with their cash flow generation and their enormous ability to market, they could certainly go on a string of acquisitions that would give balance and offset.
They've done some acquisitions. They did Vitamin Water. They did Minute Maid some years ago. What would it take for you to turn positive on the stock?
Tyler, we're in an environment like now where the market is paying for growth stories. I mean, look at some of the great growth companies this year, how well they've done. You're just showing organic top-line growth. It's very difficult at this time for me and for my colleagues at Palisade to be excited about low single-digit, 0 to low single-digit top-line growth and bottom-line growth.
All right, Dan, thank you very much. Great to see you again. Dan Veru of Palisade Capital Management.
On Wall Street today, that big drop in Coke stock held back blue chip Dow, but the Nasdaq managed to hit a 13.5-year high, notching its best 8-day winning streak since 2011. Here's a rundown of today's split session for stocks. The Dow lost 24 points, the Nasdaq was up 28, and the S&P added 2 points.
Shares of the nation's biggest home builders all ending a bit lower today after a report showed that home builder sentiment is pretty gloomy. The closely watched index posted its largest monthly decline ever in February, and builders say snow and frigid temperatures in many parts of the U.S. mean buyers are in hibernation. That, in turn, means fewer houses get bought or built. Shares of D.R. Horton, Hovnanian, Lennar, Pulte Homes, and others were down today.
Now, that record drop in home builder confidence in February has put bad weather in the crosshairs again. But some builders themselves say that's not the only reason for this winter's housing slowdown. Diana Olick has our story.
Sure, the weather in much of the nation has been truly awful this winter, but not exactly historic. The drop in home builder confidence, however, is. A monthly index gauging sentiment fell 10 points from 56 to 46 in February. 50 is the line between positive and negative. This is the first time builders have felt negative since May of last year, and it's the largest monthly drop since the survey began in 1985. Some blame this on too high expectations going into winter.
We had a huge, 2013 first half of the year. I think a lot of builders are hoping for a big volume push. It's very tough to get that volume right now, given some constraints on the labor market, given constraints on the land side, given that the economy's not picking up that fast.
Builders had the least confidence in current sales conditions and buyer traffic. Future sales expectations were down the least, but that one is based on visions of pent-up demand and the fact that we are headed into the spring season.
This is typically the heart of the selling season now, and this is really when buyers are out. When this weather clears, I think it's going to allow people to get out to the sales offices, and our traffic should pick up again.
We just love going to open houses.
Brian and Allie Cunningham braved the snow in Northern Virginia to visit a Kay Hovnanian President's Day open house. The holiday is the unofficial start of the spring housing season, but many visitors were just kicking the tires.
We bought at a very good time the first time we bought, so now we're just kind of looking around.
1, 2.
As home prices rise, confidence is coming back to the housing market, but affordability is also weakening. That has some buyers caught in the middle.
I feel like there's more movement in the market, buying and selling. So in terms of timelines, how long it would take to sell your home. I think there's a small possibility we would buy within the next year. Yeah, I mean, it does feel like everything is thawing a little bit right now.
All real estate is local, and while you can blame the weather for slow sales in much of the nation, homebuilder confidence actually fell the most in the West. That's the one region where weather wasn't a factor at all. But it is the area where home prices have shot up the most and where affordability is the worst. For Nightly Business Report, I'm Diana Olick in Silver Spring, Maryland.
Still ahead on Nightly Business Report, outside the box, can small tech startups compete with the likes of Microsoft, IBM, and Google and transform the way companies manage their data? That's coming up. Iran is playing hardball as multinational talks resumed in Vienna, aimed at curbing Tehran's nuclear ambitions. When talks opened today, Iran said it would not buckle under pressure from the U.S. and other Western nations by scrapping its nuclear power plants. This has been a key demand by the 6 nations hosting the talks.
Another global hotspot erupted today, and markets are sure to keep an eye on developments overnight and into tomorrow. Anti-government protests in Kiev, Ukraine, turned violent tonight when riot police tried to drive 2 armored personnel carriers to an encampment in the city's Independence Square. Protesters have been holding out there, living in tents for about 3 months. Tonight, some of those tents were set ablaze. There have been reports of gunfire and, late this evening local time, of more than a dozen deaths.
Japan's stock market soared higher today, gaining more than 3%. The rally came after the Bank of Japan announced new measures aimed at sparking economic growth in Japan, doubling the size of the central bank's lending fund. That move comes on news that Japan's economy grew at a much slower pace than expected at the end of last year, despite massive stimulus policies.
But that money won't help Japanese automakers, which are getting slammed by snowstorms, just like we're having here in much of the U.S. Manufacturing was suspended at some of Japan's biggest auto plants after heavy weekend snow closed roads and shut down deliveries of parts. All the big car makers, including Toyota, Nissan, Honda, Mazda, Subaru, temporarily halted operations after the weekend storms, but they have now resumed production.
An update now on a story that we brought you last week. The vote was close, but workers at a Volkswagen plant in Tennessee rejected a proposal to unionize under the United Auto Workers banner. It's a big defeat for the union's long-term plans to organize auto plants in the South. Now the UAW may be looking to organize workers at a Mercedes plant in Alabama and a Nissan factory in Mississippi. Well, Blackberry gets a big, powerful shareholder, and that's where we begin tonight's market focus. Dan Loeb's Third Point revealed that it has a 10 million share stake in Blackberry. The hedge fund now has a 1.9% position in the company, making it the 5th largest shareholder. The troubled smartphone maker also scored an upgrade from FBR Capital because of recent changes at the company and positive momentum. That helped lift shares more than 5% to $9.46. Passengers flying on United Airlines suffered widespread delays this morning because of problems with the company's computer reservation system. The flight tracking site FlightAware reported that 16% of the airline's flights were delayed as of midday, but that was also caused by weather issues in parts of the country. Shares of United Continental fell nearly 2% to $43.66. Norwegian Cruise Line posted better than expected earnings. The results beat estimates by a penny, but revenue came in shy of analyst forecasts. The company said it was pleased with a, quote, solid performance during a challenging year for the industry. But investors weren't impressed. Shares fell 4.5% to $33.56.
Shares of Waste Management took a hit after the company posted an earnings miss. The nation's largest garbage hauler and recycler swung to a fourth-quarter loss because of high asset impairment charges and higher accruals from incentive compensation. The company's outlook also missed the street's estimate. Now shares plunged 4.5% today to $41.72. And Boeing selected Everett, Washington as the site to build wings for its new 777X aircraft. The company currently builds 777 jetliners in that same location. This is a shift in strategy from the large-scale outsourcing to overseas suppliers that caused big delays on the 787 jet. Shares of Boeing up a fraction today to $130.63.
And there may be a new stock you can trade soon. The London-based video game maker behind Candy Crush Saga, an addictive game made popular on Facebook, has filed paperwork for an initial public stock offering. King Digital hopes to raise $500 million and trade shares here in the U.S.
Starwood Capital is exploring whether to begin selling stock to the public. Starwood is the company behind the upscale W hotel chain. It also owns stakes in office buildings, apartment complexes, shopping malls, and other real estate concerns.
And the next big IPO in the tech sector could be a company called Box. It's become a market leader in the fast-growing world of cloud storage. And it's just one of several startups taking on the biggest names in Silicon Valley, disrupting the tech sector's status quo. Julia Borston has more.
Startup Box has reportedly filed confidentially to go public. CEO Aaron Levy won't comment on IPO plans, but it's clear he wants Box, which serves more than 25 million individuals at 225,000 businesses, helping them manage and share information. He wants it to steal market share from giants like Microsoft.
We're investing very, very aggressively for growth right now. So that's something that we're very happy about and excited about is we see a window of opportunity with this market where the leaders of the next generation of software are going to be created right now. So we're investing to ensure that Box is one of those leaders.
The market Box is tackling, cloud tools for businesses, is worth $20 or $30 billion and growing more than 25% annually in a market where IT spending is growing at only single digits, says FBR analyst Dan Ives. The big question now is which of the tech giants which sell software to businesses are looking over their shoulder, fearing disruption by Box and other startups which take software services to the cloud.
It's the EMCs, the Oracles, potentially the Citrixes, or even like an SAP. It's really any of the traditional vendors that where cloud and mobile is a potential opportunity, but also as a threat. And that's where guys like Box, go after. And especially even a name like Microsoft, has to look out for where Box is. And I think it speaks to just a massive market opportunity where a young company like this is really making waves in the enterprise sector.
Box isn't the only startup looking to gain market share. Dropbox, which started off focusing on individual consumers and has pivoted to serve more businesses, has a market cap of $10 billion as of its last fundraising round, while Box is valued at about $2 billion. Levy is trying to distinguish Box from Dropbox with its focus on companies and to distinguish itself from the giants with its startup approach.
We're a 1,000-person company, but we still act and operate and can move at the speed of a very small startup, and that's just because of the kind of people that we've hired and the kind of culture that we've created. That lets us be very disruptive, so as soon as new platforms emerge, we tend to focus on whatever the new ways that people want to work are, and that lets us make decisions much faster and lets us innovate much more quickly.
We'll see whether Box and Dropbox manage to steal share from their bigger rivals, and as they head towards IPOs, whether they're snapped up by those larger competitors. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Coming up, technology is changing the way kids play and what parents buy in the toy aisles, leaving big questions about the future of the multi-billion-dollar business. The Toy Story, next. A new hurdle for President Obama's initiative to raise the nation's minimum wage to $10.10 an hour. The nonpartisan Congressional Budget Office says that raising the federal minimum wage would increase earnings for more than 16 million Americans by the year 2016 and pull an estimated 900,000 of them out of poverty. But it would also eliminate 500,000 mostly low-wage jobs. The GOP has assailed the plan as a jobs killer.
Americans went on a borrowing binge at the end of 2013, and so household deficits are on the high side. U.S. household debt surged by more than 2% in the final quarter of last year. Now, that doesn't sound like a lot, but it is the biggest jump in about 6 years. Most of that new debt was from mortgage loans, but there were increases in student debt, auto loans, and credit card spending. One bright spot, home equity lines of credit declined.
And finally tonight, the calendar says February, but toy makers and retailers are already working on this year's holiday shopping season, and they're doing it at the annual Toy Fair across the river in New York City. John Fort now with a look at some of this year's high-tech and surprisingly low-tech offerings.
There's no business like the toy business. From wooden blocks to solar-powered vehicles here at the annual Toy Fair in New York, some things are changing, but some things are staying the same. What's changing? Tablets and smartphones are having a big impact on what we do for fun. We spend about $22 billion a year on toys in the U.S., not including video game systems and apps.
We believe in giving people the opportunity to play our toys and games in any format they want, anytime and anywhere. We set out a blueprint about 5 years ago to do this between the studios and digital gaming. We have great digital games coming out around a lot of our brands.
And the kinds of crafts and building toys that are especially popular this year, they offer the kinds of three-dimensional experiences that you can't easily match on a touchscreen.
10 years ago, people were afraid that kids maybe would stop playing with toys because of technology. But what we've seen evolve in the last 10 years is probably the way that the toy makers are making the toys with the seamless integration of technology and to be able to recognize that kids aren't turning away from toys.
Crayola's $40 My Virtual Design Pro is a great example. Color a dress in the coloring book, snap a picture with your phone, and then watch a video of a model wearing your design. Lego has a big presence here. With the success of the Lego movie, big-ticket items like Benny's $100 spaceship due this summer are likely to be popular. Light Bright, the Viewfinder, lots of old toys have been updated for a new generation. So maybe the most remarkable thing? For every Ubuli, a $30 to $60 toy that nestles a phone or tablet, there's also a set of Melissa and Doug blocks with that retro flair, which goes to show tech hasn't taken over everything. After all, 30,000 toy industry folks will walk 7 football fields of space here this week to actually talk to each other in person. For Nightly Business Report, I'm John Fort.
Legos and blocks.
Legos and real old wooden blocks. How do you like that?
And that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for joining us.
And welcome back from your vacation. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you in part by
TheStreet.com. Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
I'm Susie Garrow with the Nightly Business Report News Brief. A mega merger in pharmaceuticals. Ireland's activists agreed to buy Forest Labs for $25 billion in cash and stock, combining two of the world's fastest-growing specialty drug makers. Coca-Cola shares fell nearly 4% today, the biggest decliner in the Dow after soda sales tumbled as more Americans opt for healthier drinks. On Wall Street, the Dow fell 24 points, hurt by shares of Coke. The Nasdaq managed to hit a 13.5-year high, adding 28 points. The S&P was up 2 points. Tesla shares closed at an all-time high after investors learned that its CEO met with Apple's head of acquisitions last year. And home builder sentiment fell by the most ever in February as winter storms kept would-be buyers away. Be sure to tune into Nightly Business Report right here on your public television station.